This episode of The Resilient Advisor. My name is Jay Coulter, and joining me today is David Stone, the founder and CEO of RetireOne. We're going to talk about some of the issues that RIAs should consider in the insurance space today.
Our mission at Resilient Advisor is to have a significant impact on the retirement crisis by educating and empowering financial advisors to better serve their clients. We bring you industry thought leaders and experts to help you make a difference in the lives of your clients.
Going independent is incredibly rewarding, but most advisors don't end up in the best place for their business. They instead end up getting sold by smooth-talking recruiters, custodian reps, or worst of all, aggregators who don't have their best interest in mind. The Independence Incubator from Resilient Advisor takes a fiduciary approach to independence. Our clients pay us directly for unbiased guidance on the best path for their business. Don't get sold, get educated, and get unbiased guidance. Visit independenceincubator.com to learn more. RetireOne bills itself as the insurance and annuity back office for RIAs and fee-based advisors. We have not done a lot of shows on the insurance space, but when we have, they've been very, very popular. Past guests have included Brad Johnson speaking about the viability of fixed index annuities, Dr. Wade Fowle talking about sequence of return risk and how to mitigate that with insurance, and Jamie Hopkins has been on talking about different strategies leveraging insurance products. There is a market for it in the RIA space, but most aren't as well versed in it as they should be. David and I are going to walk through some of the issues that RIAs should consider when thinking about insurance for their clients. David, thanks so much for coming on.
Jay, it's great to be with you. Looking forward to the discussion.
All right, so let's start with RIAs as a whole. Why do you think there is an aversion to using insurance-based products in the community?
I think it goes back many years, for many, many years, annuities and insurance products broadly, but really annuities got a bad rap. And maybe it wasn't a bad rap, maybe it was a justified rap that they were very complex products, very expensive, hard to navigate, a lot of regulatory issues surrounding them. And so over time, I think advisors just said, I don't want to be part of that. I'm a fiduciary and I'm going to put my clients into better investments. But over time, the insurance industry has obviously noticed the growth of the RIA channel and the fact that some of their clients are in retirement, approaching retirement with a lot of wealth, and have developed solutions that really fit the fiduciary model. And so I think finally, there's receptivity, a growing receptivity to fee-based solutions, but it's still a slow growth model for the most part.
So let's talk about the evolution of those products, because I think that'd be really impactful, especially for the cynical RIA who just turned on this episode and they're thinking, boy, what is Coulter talking about when it comes to insurance today? How have annuities evolved to help fit the needs of the RIA community?
Yeah, so great question. So for many years, the only fee-based annuity out there was an IOVA, investment-only variable annuity, and that was mainly to get called annuity rescue, where clients can move their assets to something cheaper, lower cost, and maintain tax deferral, and the advisor can manage the sub-accounts. And that was the premier fee-based solution for probably the last 15 years until the last 2-3 years. Now we're seeing a plethora of accumulation protection solutions, guaranteed income solutions that are fee-based, low cost, many cases liquid. And so an advisor can take their fee out of the product. So it addresses all of the concerns the advisors have. And so the accumulation products are very popular right now. They're allowing clients to stay relatively invested in the markets with the downside protection. And guaranteed income, of course, everybody's looking for guaranteed income with the ability to grow the portfolio. So those are still growing in popularity, but becoming more common for advisors to utilize.
Okay, so let's break that down just a little bit. So in a hypothetical example, most of my audience are, financial advisors, mostly independent, usually very cynical. I know that shocks you that most advisors are, but let's say I have not included insurance in my practice. I have a $250 million book of business, and I just start a conversation with you folks at RetireOne. And I say, all right, how do I incorporate annuities into my retirement income distribution stream for my clients when I have been an RIA not using them in the past? What's the process?
Yeah, sure. So in most cases, the advisors we work with, those traditional RIAs, don't have an insurance license or a broker-dealer affiliation. So they probably think there could be a need for an income guarantee or an accumulation protection product. The client might be asking for one, and they're trying to figure out, okay, how do I navigate that? So what we do, it's an outsourced model. And just real quick, I'm an attorney by trade. I was at Schwab for many years before starting RetireOne. I was also one of the ones very cynical about annuities. Been involved with them for probably 3 decades now. But ultimately, the advisor is looking to do what's in the best interest of the client. So it's a referral model for the most part. So it's as simple as just referring the client to us. We help determine what is the need for the particular protection involved. Then we help with getting it onboarded, and also not only helping the client understand how it works and the advisor as well, but also getting the advisor integrated from a technology perspective so they can also monitor what's going on with the portfolios or with the guarantee and be able to, in real time, see the value of the guarantee for the client.
Okay, so that would be a very important aspect, is being able to see that asset in the client's tech stack so the client can monitor it. More importantly, the advisor can still have oversight over it to a degree. So do these solutions integrate with Orion, Black Diamond, Advison? How does this work?
Yeah, they do. So we're able to provide data feeds for advisors to utilize those platforms. They're able to see the positions, and depending on the type of annuity, they can see whether, it could be a variable annuity with the underlying investments. It could be a FIA or a product that has indices, and they're able to see the value of those, or guaranteed income, where they're able to see the benefit, the income benefit for the client. So there's complete transparency of those benefits and features, and also it enables the advisor to also do their fee billing on the account as well, which is another great value in addition to what these products can do for the advisor. Allows them to deduct their fee from the annuity itself.
So the fee is deducted from the annuity. It's not made up somewhere else.
Well, the optionality is with the advisor. Some prefer not to take it out of the annuity. Many are starting to take it out of the annuity, but from a regulatory perspective, from a tax perspective, the IRS has blessed the ability to take the fee out of the account if that's what the advisor and client want to do.
Okay. And so forgive my ignorance, do they have to have an insurance license to do that?
No, so the recognition on behalf of the regulators is that if you're a registered investment advisor, you're managing the client's assets. So you're providing an advisory service on behalf of the client. We're able to take the fee out of the account up to, I believe it's 1.5% of our fee from the account. And it's perfectly legal and fits into the regulatory scheme.
Excellent. I did not know that. So
Yep.
let's talk about life insurance. So how does the same construct work? I'm a $250 million RIA. Somebody needs insurance. I send it to the guy down the street. How could you then do this in-house, leveraging a platform like RetireOne?
Yeah, so we believe it's really good and in the client's best interest and the advisor's best interest to have a common platform for all their needs. And most everyone utilizes life insurance, with most utilizing term insurance. There are other situations where other types of life insurance might make sense as well, but certainly for life insurance, that's the most prominent one. And so the idea of offloading your client to a insurance agent who might sell other products, have other types of relationships they could ultimately pitch their client, is something I think most advisors don't want to do. So the ability to offer the client the insurance they need, most typically term insurance, is something they can easily do through us, and it preserves the relationship with the client, and the client once again, and the advisor gets to get the feeds and maintain it all on the platform of the advisor.
So David, how does that work with whole life type products?
Whole life is a little bit different. Whole life, there's underwriting that goes on with that. It's a little more sophisticated engagement, and so in that situation, we will go deeper with the client. We will walk them through available options. Once again, it's the best interest standard for any type of insurance purchase, and so we'll walk them through the best solution. There's starting to be a few fee-based versions of universal variable life, for example, which allows the advisor to also participate and manage the sub accounts. So in most situations where we're talking about a more permanent type of life insurance, the advisor will be looking at a variable universal life, which enables them to manage sub accounts from Dimensional, Vanguard, whatever, and be able to charge their advisory fee on those assets. So it's win-win for the client. They're getting a commission-free product, better benefit, and the advisor can manage the portfolio for the client.
All right, so a commission-free product sounds like there's going to be some cost-effective investment solutions inside of there. So putting their investment advice wrapper on top of it still makes it more cost-effective than going down to the regular old insurance shop and grabbing a whole life policy. Is that fair, or permanent?
That's very fair. And also, historically, those illustrations on the whole life side, have not always been met throughout the years, as they always show typically inflated return rates in the fixed account of the insurance company. So this way, the client is able to actually participate in the market. The advisor can manage the assets, probably a much better outcome long-term for the client.
Yeah, excellent. So we connected because of a survey you guys recently released on advisors' attitudes towards the insurance space. You did this in conjunction with Protective Life. What was the premise of the survey?
So the premise was really focused on the annuity side and really two things: accumulation protection and guaranteed income, and how advisors are utilizing them or not utilizing them, and their perceptions and attitude towards those types of solutions.
Okay, and so what were some of the key findings?
Well, the number one key finding, I think, was those advisors who do utilize guaranteed income for their clients. Them and their clients both love the fact there's guaranteed income and the peace of mind it provides, and the benefit overall to the portfolio long term, having higher equity in most cases, is something that advisors really do appreciate and like. The flip side, the challenge though, is not enough advisors are fully utilizing those solutions. So the ones who do utilize them really do like them though.
Okay. So where can advisors grab a copy of this survey and start to learn a little bit more about the applications of insurance products in their practice?
Yes, we welcome them to come to our website. We have the full survey available if they come to retireone.com. More than happy to share the results with anybody who comes to our website. And also, I think the information in the survey also shows that there's a need for advisors, or for us to help advisors understand annuities more. I think one of the gaps, which is evident from the survey results, is that there seems to be a lot of advisors who are more engaged now than ever before with annuities. In fact, the percentage of advisors who refuse to use annuities has gone down from, I think, 33% to about 25%, which is good. But there's still a gap. They want to know more about how they work, which is fair because these are relatively new products, all in the last 2-3 years, and they're evolving all the time, and new ones are coming out all the time. And so I think there's a need for more education with regard to these products.
Well, David, it's definitely an education game because, like you mentioned, I probably fit the avatar of the person who had annuities in one particular type of bucket for a long period of time. And then I had some folks come on the show. They explained the benefits, not for all situations, but in certain situations where insurance products make sense. And gosh, we did that show a couple years ago. And now we've seen fees come down, it sounds like. The benefits have gone up. And it can be a really viable part of an RIA's arsenal to include insurance products. Is that fair?
It's very fair. And also, I think we're really excited too about what the future looks like. So there's been this transition now from commission to fee based, which is good because the products obviously cut out the commissions and you make them simpler. That's really good. But the next gen of these products are going to be ones that fully leverage technology and allow advisors to actually manage portfolios away from the insurance company, invest in ETFs, and still get the insurance protections. So we can't talk about specific things yet. They're still in development, but there's going to be a number of solutions out there over the next 12 months that will really broaden the types of investments and change how advisors, I think, view guaranteed income in particular.
Great. David, listen, I appreciate you coming on, sharing some of the results from the survey, educating me and educating the audience a little bit about the evolution of insurance products for the RIA space. Podcast listeners, to learn more about RetireOne, please visit retireone.com. That is retireone.com. David, thanks for coming on.
Jay, my pleasure. Thank you so much.